Hello everyone and welcome to TTT Markets. I am Fotis and in this video I'm going to discuss with you high probability FX trading ideas. I will introduce you to a global macro style of trading and I will share with you our November outlook. So let's get started. I will begin with this, which is the 10-year US yield. Why am I starting with this? So I can explain the latest FOMC meeting that happened in October. What happened then? Well, look, before the meeting there was expectations that the Fed is going to cut, the yields were moving lower, and indeed they delivered. They decided to cut rates by another 25 basis points and bring the Fed funds rate to the range of 3.75 to 4%. They also said something extremely important. They said they are going to end the balance sheet runoff from December the 1st. So no more QT, that means quantitative tightening, and we are moving in a completely new period. So you might say, if the Fed announces that they are going to terminate QT, no more balance sheet runoff from December the 1st, that is pretty easing conditions, right? Right, that's correct. So why did the yields move up? This is what you need to understand. And let's try to understand the economy first. The Fed clearly signaled a time for moderation. The committee voted 10 against 2 for the cut, reflecting growing divisions. One member wanted a larger cut, another preferred to hold rates steady. So this mixed stance reflects a shift in the balance of risks. Inflation is easing, yes, but labor market is showing cracks. And even Powell said he called the monetary policy moderately restrictive and stressed that a December cut is not guaranteed. So this is the part during the interview that caused the yields to move up. Everything was moving lower during the announcement. We had the cut. They did say that they see risks in the economy. They did say that they are concerned about the labor market. Inflation is moving lower, so they are fine with this. It is in a decent area at the moment, moving lower. So they are not worried too much about inflation, although it is at higher levels, but they are concerned about the labor market. But the part that caused the yields to push higher is during the interview, Powell said, don't expect that the December cut is guaranteed. It is not. We monitor the data, we monitor the situation, and then we are going to decide. And why do you think he said this? If they acknowledge that there is problem in the economy, if they see cracks, if they are worried about labor, then why say something like, oh, by the way, a December cut is not guaranteed and triggering this? This is because inflation, although moving lower, it is far from an area that it can be safe. There are signs that inflation could move even higher in the next few months. So they have to be careful. They acknowledge the risks. This is why they cut, and they signal they might cut even more, but they do not guarantee the cut. And look now the impact in the US dollar. What happened to the US dollar? So let's look. It was moving lower because of expectations that the Fed is going to be dovish, the Fed is going to cut, and they did cut. They are going to end QT, but they said this phrase that December cut is not guaranteed. So look what happened as soon as Powell said that. So can you see how the dollar index pushed higher? So now you know why this has happened. It is because of that statement. Now, let's look at the overall picture though, what is happening. This is the dollar index. So the dollar index moved lower. It formed a double bottom here. This is an important area. Previously it was an important support, and the dollar is trying now to reclaim this. So I'm just zooming out so you can see the big picture. Is it going to accept this area, and is the buyers going to push this higher, or is it going to find resistance here and push it lower? This is why I'm beginning with the macro, so you understand the reasons. Number one, the Fed is acknowledging that they are concerned about the labor market. So although inflation is moving slightly lower, growth is okay, not something to be thrilled about, but it is not bad. So we do not see immediate signs that GDP growth is suffering, but we see the first signs of weakness in the economy. What are those signs? Number one, the labor market. This is why they are going to ease conditions, but perhaps they are not going to do this so fast. This is what you need to keep in mind so you can understand if this is going to push higher or this is going to break back lower. It's the economy. It's not only the price action. What other things, what other cracks do we see in the economy? Well, something to pay attention in the weeks and months ahead is the credit markets. So what is happening? What is the credit markets? The US leveraged loan market is showing early signs of stress. Default rates reached 5.6% in late 2024, and lately, last month or last couple of months, we see further bankruptcies, major bankruptcies. For example, an auto parts company, an auto lender in the United States, and this has triggered losses. And there was actually the CEO of JP Morgan, Jamie Dimon, he warned that a benign credit environment is happening right now. And he said, and that was a statement that caused unrest in the market, he said, when you see one cockroach, there is probably more. So this is something to pay attention. So number one, labor market. Number two, credit markets. Number three, the repo markets. What is that? The repo market is the market where banks borrow money overnight from the Fed. So you have to be careful about this. So the Fed is having a function called standing repo facility. So the banks, when they need cash overnight, they go there and they borrow money. Over 2 days, they borrowed more than 15 billion by this mechanism, and that was the highest since the COVID crisis. You might say, hang on a second, you told us you are going to speak about FX trading ideas, and you tell us about labor, you tell us about credit, and you tell us now about the repo market. Yes, and I can tell you about delinquency rates. I can tell you that the automobile market is suffering, is extremely suffering. I can tell you that the housing market is weak. I can tell you that we see signs even in the consumer, in the credit card space. So all of that, this is why I'm mentioning, is what can potentially cause the US yield to move lower. Let me go back to the US yield to move lower. So this is the 10-year yield. You see it moved up because of that statement, what Powell said, that the cut is far from guaranteed. But still, can you see the trend? Can the US economy, based on what is happening now, tolerate yields more than 4.20? I don't think so. With everything that I mentioned to you about delinquency rates, automobile market, the repo market, it will be extremely tough. So I think in the future, even if we see maybe in short term some spikes, this is going to move lower. And this is having an impact in the dollar index. You have to pay attention to this. You have to pay attention to the 10-year yield, and you have to pay attention to the dollar index. So to know where are you doing business and what is more likely to happen. So pay attention in this area. What can cause the dollar index to rise over the next months? The US dollar can act as a safe haven against the euro, against commodity currencies, if we see signs of weakness, extreme weakness in the global economy. So the US dollar, despite the weakness, is still the reserve currency of the world. So you have to pay attention in this area what is going to happen. You also need to pay attention to the yield. So I explained all this so you understand the background and the narrative. So now we are moving next to specific trading ideas. So now that you understand, let's see what we said back in October, what happened and what do we see next. So now we have a background. Shall we expect the Fed to be hawkish? That means to raise rates, or the contrary? I would say the contrary. What does this mean? I do not think the Fed is in a position from now on to go ahead and tighten conditions. From now on, I think it is more likely that they will ease conditions. What does this mean for dollar yen? Back in the beginning of October, I shared with you this chart and I said I am only interested to sell from resistance. So this is at the end of September, beginning of October, the market was moving lower because of the Fed expectations. Then we had that comment from Powell that a cut is far from guaranteed. It moved to this area, and then what happened? So this is where I was doing business. I said I'm only interested to sell from resistance because I'm moving with the macro, okay? With the macro theme, not against this. It moved another, let's say 400 pips, move down. Since then, it has moved up. This is because also of developments in Japan, but I'm going to explain in a second. So the dollar yen moved up, reached again this longer term resistance, and again it is showing signs of weakness. Again, what do you think we should do in this area? Again, I'm only interested to sell. I do have my stops. I'm going to be very careful and cut positions if this is going to move above 154.80. But again, in this area, I am only interested to sell. Keep this in mind. The Japanese do not like a very strong yen because this is hurting the exports. Do you see this move right here? This is a verbal intervention by the Japanese finance minister Satsuki Katayama. What did she say? She issued a strong verbal warning about the yen's slide and FX volatility. She said, I'm seeing one-sided and rapid moves in the currency market. There's no change in our stance of assessing developments with a high sense of urgency. And this came as the yen approached new multi-month lows, or dollar yen approached new multi-month highs. So after this comment, that was a strong verbal intervention, the dollar yen dropped. But since then, since there was no actual intervention, I mean, they didn't went to sell dollars and buy yens, it was a verbal intervention, the dollar rose again. Please remember what is happening right now. The government has shut down, there are no data. Powell said after all that the cut is far from guaranteed. But what do you think we should be doing in this area? As soon as it approaches 154, the Japanese officials, the finance minister, they come out publicly and they try to intervene verbally. So you have to be very careful in this area. So in this area, where the Bank of Japan or the ministry, they are intervening verbally, and who knows, they might actually go ahead and intervene, I'm only interested to sell. You need to be careful because this is the trend line. This is a very important trend line. If it breaks, it changes completely the outlook in dollar yen. The real value of dollar yen, when I look to my fundamentals, is much lower. I think it should be closer or below 140. So that's another reason why I'm only interested to sell here. Now maybe you understand the reasons a little bit better. What I told you at the beginning about the yields, about the Fed, that the Fed is interested to have more easing conditions. We are terminating QT. We see cracks in the economy, credit market, repo market, the labor market. We have a verbal intervention in this area, so be careful. And this is an area to sell, take some profit, sell again, and pay attention for a break. Next, I'm going to show you Euro-Yen. I do not wish to mention anything about the macro fundamentals here. This is moving also because of cross dynamics. Last time I told you to sell, so you can see it moved down. This is in October. It moved down from the highs, then it moved up because of what was happening in the dollar side. It reached the highs, down again, and another strong move. As I have told you 1 month ago, I'm only interested to be selling into resistance, and I'm getting very strong moves, 300, 400 pips to the downside. Something that has happened now, as you can see, the trend line is broken. It has printed multi-month or even multi-year highs. The trend line is broken. There is a very strong chance this is a top. It is still under development, but it looks possible. Can you see that I'm not talking about guarantees, I'm talking about possibilities. And I am interested here to sell towards 177.30, 40. If the trend line is broken, I will be cautious and I will be careful, but I think this has room to go to closer to 174. Aussie yen, let me click restore, okay? I'm paying attention. Why? Let me zoom out so you can see. Can you see this triangle here, here, and here? So this is the triangle. This has broken to the downside. It is attempting now to move back up. But I think, I'm not certain, but I think we are going to have a series of lower highs. So I'm deciding where I'm going to do business. This is going to move together with equities. I think also equities, it might be difficult to print new highs. So be careful with equities. This is going to move together with US equities. So I'm interested to do business when I see weakness in stocks. As you can see, I have highlighted where I'm doing business, and that's my trigger. For now, even if I see this resistance here, I am not pulling the plug, I am not selling, because I am a little bit uncertain about stocks. So I have other things to sell. I'm selling the dollar yen, I'm selling the euro yen. I'm a little bit more cautious with Aussie yen. Where I am more aggressive though is the GBP yen, which is right here. Let me click restore, okay. Why? You might say why? Well, I have very strong fundamentals to support my case. Last time I told you only to sell. So what happened? Another move down. It moved back up into resistance. Huge move, 300-400 pips lower. It moves back up again. Another 400-500 pips lower. You can see it is printing a series of lower highs. So what I'm looking to do is every time it reaches now resistance, I am only interested to sell. I'm trying to build a bigger position here, short position. Why? Because the British pound overall is going to remain under significant pressure. This is because of a combination of fiscal uncertainty. In simple English, they have messed things up, softer economic data, and renewed speculation of policy easing by the Bank of England. Perhaps the most important catalyst is going to happen on November 26th. Write this down. November 26th. This is when This is when Finance Minister Rachel Reeves' autumn budget is going to be publicly shared. She's going to announce the autumn budget on November the 26th, and markets are fearing a potential tax increase. If this happens, and there is a strong possibility that this is going to happen, unfortunately, it is going to be extremely bad, not for the pound, but for the UK's economy. Growth is extremely fragile now, and this is going just kill it. This fiscal caution, it has amplified expectations that in return the Bank of England may need to offset the drag through monetary easing. So Rachel Reeves is messing things up, they are introducing more taxes, the Bank of England then has no alternative but cut. So this is very important. Now, because we have a Bank of England meeting, you see it is around the 201 level. You can see it is around the 201 level. Pay attention, this is the pound yen, it is called the widow maker. I cannot rule out a sudden move a little bit higher. So when you sell, do it with a position size that you can accept and it is not going to drain your account. So be careful. I am selling, but I'm doing this in multiple clips. I'm scaling in with small size. I'm not betting the farm. So even if it moves to 203 or even higher, I can accept this and I can sell again because I think the longer term move is to the downside and we will see very strong moves overall in the pound. So please pay attention. When it comes to the yen, I think they have inflation, they have stronger growth, there is going to be a divergence against other central banks. This is why I am insisting to buy yen, because despite the short-term noise, we are going to have troubles in the global economy. We are going to see further weakness in the next few months. As I told you, I do see the signs in the repo market and in the credit markets. And which one is the weakest link? This is how I approach this. It is the UK, so I'm paying attention to the British pound. Then I'm looking at divergences in monetary policy. We have dollar-yen. What is happening? Easing conditions down the line. So I'm interested to sell at highs. Euro-yen, the same. So I'm paying attention to do business from the right area. What you keep from this session is to pay attention to the yield. This will dictate what will go on overall in financial markets. And pay attention to this. If this moves up aggressively, if dollar moves up aggressively, it could mean that we have safe haven flows where the dollar and the yen strengthen against everyone else. So this is something to pay attention. If you are looking to trade the Euro USD, definitely pay attention to the dollar index. So for example, this is why we were buying at 1570, 1580. Now we are taking profits. When the dollar index moves back down again, maybe this is time to sell the euro dollar. But I am avoiding trading the euro dollar at the moment because I do not have a very strong theme when it comes to the macro. But as I explained, when it comes to dollar yen, euro yen, Aussie yen, all the yen crosses, I have stronger themes, especially against the pound, and this is giving me increased chances of success and better reward risks. Thank you for watching. We are going to see you in the next video about high probability FX trading ideas.